What's the deal, YouTube? It's your boy Lil Man. We back at it again with another video. So look, today we're gonna break down 4 trades that I took the last 2 weeks, and they all hit take profit, and you cattle still in it, and it's about to take profit soon. I'm gonna show you guys that. But this is gonna be a good breakdown. I'm gonna show you guys how I view the market and how I look at it. So without any further ado, man, let's get right into it. Okay, what's up, you guys? Let's get in the charts. So these are the trades I'm gonna be going over. Like I said, these 4: German British Pound, NZD. The Euro versus the JPY, the Euro versus the AUD, and then USD CAD. So let's start with German British Pound NZD. So I'm going to try to break these down quick because I don't want the video to be too long. I got 4 trades I'm going to be covering. So if I'm talking fast, I'm sorry. Just going to have to catch up. But we're just going to start with GBP NZD. So let's go to the daily. You guys want to start a daily, right? So we can get the overall picture. Because if we were looking at the 15-minute and we are seeing this uptrend right here, as you can tell, it's an uptrend. So we're only looking for buys, right? So that already takes the sales all out the way. So we're only looking for buys in this market because it's bullish, right? Higher highs, higher lows, higher highs, higher lows. So this is the daily. So if we were on the 15-minute, this is what price looked like. And we don't know which way this is going, right? This is just too confusing. You can't really see nothing. So we're going to zoom it out so we can see everything. We can see the chart. So like I said, we're bullish, right? So we're going up. So we're only looking to take buys. So in this market, what will we be taking? Sells or buys? Sells, right? This market, what? Buys. In this market, what? Buys. So you guys are good at trading already. So let's break it down. Market structure first. So you can just zoom out. I really like the 6 hour because I use the daily and the 4 hour, but the 6 hour is just in the middle of those, and it just helps me view the market a little bit better. So if you guys want to start using the 6 hour, I would definitely encourage it because it can just give you a better, even though all time frames are good to use, the 6 hour I just like it a lot. So anyways, let's look at market structure. So we're just going to start here in the chart, right? And as you can tell, market structure, or let me just put this out real quick so you guys know. I'm just going to go over market structure again, even though I did in my other videos. And I'm going to go over impulses and retracements. So in market structure, price has to go up, down, up, down. Now, if we're just looking at this right here, right, this is a low, this is a high, this is a higher low, and this is a higher high. Now, once we break the previous high, this is a new higher high, right? Because we're making a new higher high. Then we're coming back down to make a new higher low, higher high, higher low, higher high, higher low, higher high, higher low, right? So you get the point. These are all the lows, and they're higher than the previous low. So they're called higher lows. And these are all highs, and they're higher than the previous high, right? So they're called higher highs. So in the bullish market, you have higher highs and higher lows. In the opposite, go over this real quick. Just so anybody, if this is the first video watch, you understand. But in a bearish market, price is going to make, so this is a high, this is a low, lower high, lower low, lower high, lower low, lower high, lower low. So these are the highs, right? And they're lower highs because they're still highs, but they're lower than the previous high, right? This one's lower than this one, this one's lower than this one, this one's lower than this one. And these are lows. And they're called lower lows because the low is lower than the previous low. So high, low, lower high, lower low, lower high, lower low, lower high, break this to make a new lower low. So that's just market structure. And you have to have market structure to be able to trade forex. If you don't incorporate market structure, then you're just going to be looking at the market not how you're supposed to be, right? So anyways, that was just market structure. Now we're going to take a look at impulses and retracements, which go along with market structure. So you just good to tie it in. So as we know, price doesn't always just go up or go straight down, right? We move in waves, like I've been saying on my other videos. So like I just showed you in market structure, we go in waves, right? So these are just phases in the market, right? So this is a push phase. So impulse, push is the same, and a retracement and a pullback or exhaust. Those are all the same, right? So push, impulse, and then after those, we have our retracements, our pullbacks, and then impulse, right? Pullback, retracement, exhaust, impulse, right? So, like you see here, price pushes, and then it runs out of steam and retraces. Then pushes again, runs out of steam, retraces. Pushes again, runs out of steam. Pushes again, runs out of steam. So, this is just help you identify that if you were trying to get into the market right here, or right here, or right here or right here trying to buy, it would not be good, right? Because what do we see here? Price has to come back to retrace and then the impulse, right? So where would you guys rather get in? Would you rather get in here or on the lows, on the higher lows? Higher lows, right? Because you can have a stop loss here and you have a bigger reward, right? And instead, if you were to get in right here, you would have your stop loss probably under here and then take profit probably right here, and you would only make like a what? Not even a 1-to-1, right? You're losing money. So we wouldn't do that. So impulses is just show you guys which way you're in the market. So you wouldn't want to buy here and you wouldn't want to sell here, right? So if we're in a bullish market like this is right now, we would want to buy at the lows, 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 at the higher lows, right? So higher low, higher high, higher low, higher high, higher low. And the opposite, if it was in a bearish, same thing, right? This is sloppy, but you'll get the point. Impulse, pullback, impulse, pullback, impulse, pullback, impulse, right? So we would want to be somewhere right here or right here. No, the tops, right? So we would want to find our entry points here, 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 and here. Because if we would sell here, what happens? We would probably get stopped out before the trade goes in our direction, right? So you always want to look where price is exhausting at, where price is just settling at, right? So as we can tell in this, I'm just going to go over it again real quick. Where are the impulses? Where do you see impulses and where do you see retracements? So impulse, retracement. Impulse, retracement. Impulse, retracement, right? So that's just how the market moves, because the market don't just go up or go straight down. So now we got that out the way. Let's go ahead and look at this price. Or let's go ahead and look at the German British pound versus the New Zealand dollar. So like I said, we're already bullish, right? So we're looking for buys. So that takes out all the sells automatically. So now let's look at market structure, because that's the first thing you should identify when you're looking at the market. So I'm just going to start here, right? So this is a low. This is a high. Higher low, higher high, higher low, higher high. I'm not going to plot these out because if I do, they're going to put all my price back in. So just try to stay with me. This is a low, high, higher low, higher high, higher low, higher high, higher low, higher high. This is caused by news, right? So we're not really looking at this week. But anyway, so this is the previous higher low, right? So if we were to continue to be in bullish, we can't break this higher low, right? Because if we break it, then price would be bearish, or it would break the previous higher low. So it just invalidates all this uptrend, right? So as you can tell right here, price closed and broke under this previous higher low. So now we're not bullish anymore, right? We're waiting for new market structure to form. So now we're just waiting. Okay, now we got new market structure, right? We got a low here, high, higher low. Not yet, because we still haven't broke this, right? If I'm talking about right here. So we have a low, high, lower, or low, high, higher low. And once we break this high, then we're a higher high. Now we're looking at bullish market. So broke it right here, right? So now we're making a higher high. So like I said, low, high, higher low, higher high. Higher low, because we didn't break this, right? We're not breaking it, we're not breaking it, we're not breaking it. And then we're coming up to make a new higher high. I don't know why this keeps taking my stuff out, but anyway, just gonna go back to here. So, like I said, we have a low, high, higher low, higher high. And like I said, after we have our higher high, what are we waiting for? So we have a low, high, higher low, higher high. We're waiting for the next higher low to catch it to be able to make that money, right? So let's see where we can find the next higher low. So I have these labeled out because I just use them for market structure when I'm in the charts. So I have this trend line here, or let me just break this trade down now that I talked about everything else except for the actual trade. But so like I said, we're bullish right now, right? And I have one trend line on this chart, right? And it's connecting this point to this point. So I just drew in this trend line right here and I connected it to hit this point and this point. Because I didn't connect this point to this point or any of that because I cleared all those. Because you can draw your trend line anywhere, right? You can have it from this low to this low and then try to find a third touch. So like we said, hit a third touch right here and price went up. So all I really look for is just third touches. Not all I look for, but that's just the added confluence that I look for. It's just a third touch, right? So let's put our trend line back. And let's look for a third touch. So we already know we're at a higher high. We're just waiting for a higher low. So let's wait for that third touch. Bam. Now we got a third touch, right? One touch, two touch, three touches. And now we push through the level and we'll come back up. So at this point, I wasn't really looking for buys right here around this level, right? Because we do have our third touch, but what other confluences do we have? We don't have no key levels in here, like our support and resistance levels, right? See how it hits here, bounces up, hits here, bounces up. Hit his resistance right here, fell, resistance fell, resistance fell, resistance fell, resistance fell. We don't have no key levels in here, right? So all we're looking at is just a trend line touch. So obviously we're not going to get in just on that. We can probably draw a fib up, but as you can tell, this is a 78.6. And even though it's right there, I'm not really looking for that because that's only two confluences, right? We have our trend line and our fib level. So that's just two confluences. So we wouldn't get a trade right there. But and I'm going to go over this Euro AUD trade, and it's going to look cleaner than this one because this was kind of messy. So it's going to be kind of hard to understand, especially if you're new, but just try to stay with me. So we have our one touch, two touch. Like I said, we just wait for the third touch. So price came, hit it, and it played around at the level, right? Buyers probably got in here after they seen price start pushing up, probably had their take profit up here, and a stop loss under this level or whatever, right? Because I think price is going to keep coming up here. But no. Let's see what happened with price. So price played around, probably got a lot of sellers and buyers in the market right there, confused or whatever. And then buyers are probably thinking they were good right there, and then what? Bam, we broke it. So this is why market structure is very important, right? So I'm just going to go over this real quick. Market structure is key in forex. Market structure is key in forex. Key, key, key. So remember that because this is going to help you a lot in your trading. So market structure is very key, very key, very key, very key in forex, right? You need market structure to do anything in forex, right? So you have to identify market structure. You have to be able to get good at market structure, and you have to be able to just identify the markets, like I said, right? So just get very good at understanding market structure and looking at swing lows and swing highs and just being able to identify what phase the market's in, because then you'll get better as you go. But anyways, let's just go over what I'm going to go over during this trade. So this is market structure, right? And this is a bullish or bearish market structure. It's bullish, right? Because we're making higher highs and higher lows. So we're going up. We're only looking to buy. We're not looking to sell at all in this market. So for this trade, or not this trade, but this is how market structure works, right? So, let's act like we hit that. So like I said earlier when the video started, we have our first touch, second touch, and our third touch, right? And like I said when the video started, so this is our low, high, higher low, higher high, higher low, higher high, higher low. So where's the previous higher low at? This one, right? Or let's just act like we didn't come up all the way over here, right? Let's just act like price is right here and stop. So just get this out your head right now. But anyways, let's just act like price is right here right now. So this is our previous higher low, right? Low, high, higher low, higher high, higher low. So we didn't break this yet because we're still right here. So there's no higher high, right? So our previous higher low is this one. So let's just say we're in an uptrend. We have this trend line. And once you have a trend line in the market, everybody really sees the same trend lines unless you just, I don't know. But anyways, if you have a trend line marked up, there's usually a pretty good chance that there's somebody else seeing that trend line and seeing that. So trend lines are basically trap lines. So you just have to really get good at identifying them and identifying places to get in and just looking at market structure. So anyways, this is our previous higher low, and in order for this bullish market to be invalid, we have to break and close under this, right? Let's say price comes here and then goes up. Even though we broke the trend line, right, and retail traders probably started selling the market because we broke this big trend line, so we're going to start breaking, going down the hill, right? We're going to come all the way down here and then probably even go lower. No, you always have to look at market structure, right? Because like I said, this is the previous higher low. So in order for this to be invalid, we have to break this and close this. So if we go down here and we do this, did we break it and close under here? No. So we're still in the bullish market, right? Because it's a low, high, higher low, higher high, higher low, higher high, equal higher low, right? We didn't break this. Equal higher low, and then price could just come up and start making a new trend. Or not new trend, just keep going in that trend, right? So let's talk about this, right? So this is important Because if price were to come down here, break this trend line, sellers were to get in the market, they'll think it'll just be crashing, like I said. But right here is where we can identify market structure, right? So if price breaks and closes under here, then we're no longer biased, right? We're no longer bullish. We're more bearish, and we have to wait for new market structure to form, like I said back here. So this is where you can potentially get in and have a big risk to reward, right? So let's say we got it on this third touch. So let's just say we got in right here, and we're looking for the market to go up. Well, this is the previous higher low, so we would have to have our stop loss at least under here to be safe, right? Because price could play around anywhere in this level before going up. So if your stop loss is right here under this, it could just take you out and then go straight up in your direction, right? But this is our stop loss. And let's say price, I got too many lines on here, hold up. All right, good, that helps a little bit better. So, like I said, if we were to buy right here, we would have our stop loss under the previous higher low, and our take profit would be wherever your take profit is, right? So somewhere up here. So look how much we have. We have probably a 1-to-1, right? Because all this is your risk and all this is your reward, right? So this would probably be about a 1-to-1, 1 to 1.5, right? Something like that. So if you would risk $1,000, you would make probably about $1,000 or $1,500, right? So in the long run, doing 1-to-1s, that's not going to be good making profit consistently in the market, right? You want to have risk to rewards that are like 1-to-2. That'd be like 1-to-2 at least, but 1-to-3, 1-to-4, 1-to-5. You know, just this is better. This is as good as a risk reward as you can get, right? So let's go over this. So like I said, we're in a bullish market phases. This first touch, second touch, third touch. So let's just say price didn't go up, right? Let's say that price kept going down and hit this higher low. Well, we know that if it breaks this, we're no longer buying, right? We're no longer bullish. So this would be the best opportunity to get into the market, right? Because look at the potential we have. We have to get to just the previous high, we have all this room, right? And your stop loss would be right here under the previous higher low. So this is your risk. This is your reward. So like I said, a 1-to-1 wouldn't be good, right? But this, like a 1-to-5, 1-to-4, 5 times your risk, 4 times your risk. So if you're risking like $1,000, you're making like $4,000 to $5,000 per trade. So that's going to be a better risk to reward in the long run, right? Obviously. So let's just say price broke this, came here, we bought here, and then price goes all the way up. So that's just buying at the previous higher low once it breaks the trend line, right, on the third touch. That's pretty much what I'm going to be teaching you guys today and talking about, because that's some trades that I took in the market this week. So let's go back to German British pound and identify that. So like I said, we had our 1 touch, 2 touch. This will be our third touch, and we didn't go up, right? We didn't break this high to make a new higher high. So we're still in this range, this higher low and this higher high. And we could play around anywhere in this level before going up. So this is where I was looking to buy, right? This is our previous higher low, right? Like I said, we had our low, high, higher low, higher high. So now we come down here, we break this trend line. So now this is where I'm looking to get into the market, because this would have a stop loss. You can just put it right under the low, right? So you can put it right here, right here, right here, right here, wherever, right? So we want to have a tight stop loss. So we're just going to put it around right here, right? And then look at our reward. Look at all this we could gain. And we could even come up to this previous higher high. And that's where I had my take profit at first. But then I decided to just put it right here when price is pushing up. And I'll show you guys that. But so this is what the setup looked like. And if you just understood what I said up there, then this will make sense to you. So it was a 1 touch, 2 touch, third touch, break of the trend line, come back to retest the previous higher low. So minimum risk, maximum reward. So this is when I got into or not this, but let's go down to the 4-hour. So I don't get in right when it hits the level, right? Because it could just crash and break right through the level. So we want to see what it's going to do at the level. So you see how we were sitting here on the lower time frame for a good 5-6 hours, right? So this is when I got in the trade right around here, something like that. And actually I have it on my Google Sheets, so you could just go to that real quick. So German British pound NZD. So this is what it looked like when I entered the trade, right? So couple wicks. This is on the 4 hour, so about 2 to 3 candles, right? So let's go to the 4 hour. So about right here is where I entered, right? And I have my take profit here, like I said at first, but then once price started coming up, I just put it here. So I'm just gonna keep it here for now for the video. Or actually, no, I'm not, because I want to show you guys my risk to reward. So this is where our target was, right? We was aiming for these previous highs, and our stop loss was 95831. So let's go ahead and enter that in. 95831. 95831. So this is what the risk reward looked like. So it was a 1 to 4, right? So if we're risking $1,000, we're making 4,000. If we were to hit take profit and not take partials or anything like that. So this is what the trade looked like I said, and I got in right around here, and let's just look what happened with the trade once I got in. And I'll tell you guys how I managed it and stuff. So price started playing around, came back down, and I'm pretty sure it stopped a couple people out right here, whatever. So it just made that little wick, closed right there. So we were still in the trade, everything was still looking good. Stop loss is down here. Didn't break this previous higher low over here. We're still looking good. So price was playing around for here for a couple hours, a couple days, and then all of a sudden, boom! Look at that candle right there. It was like a 200 yeah, it was like a 200 pip candle, and once that happened, I was like, yeah, we definitely just going up. So once that happened, I put my stop loss to break even, so there's no risk on the trade. So if price were to come back here, I would lose nothing because there's no stop loss. It's just break even. And once price hit here, actually I'm lying. Price was right here, and once I seen it tap that, I just wanted to close the trade, right? Because it was this fat candle, so price could just come right back down if there's a candle like this. So I just wanted to close it right when it hit my take profit, and that's where I have my alarm at. So once it hit that, I closed it right around here, and it was just a good solid trade. And I'll show you guys what it looked like when I closed it. So this is what it looked like when I, oh, this is on my phone too. But basically, price it up here, right? And I closed it. So that was the GN trade. I hope you guys understood that. We're just going to move right on to the next one. Let's go to EJ. So looking at this price action, what do you see? Uptrend or downtrend? Downtrend, right? So we're only looking for sales. That's on the 6 hour, this is on the daily. So we're in this uptrend, and now we're in this downtrend. So in here you can identify a reversal pattern in the market. So you see how we're at the top and we're starting to form this new trend. You can identify reversal patterns in the market by head and shoulders pattern. So if you're looking at the top of the chart and you're waiting for the price to reverse on you or something, or just whatever, if you're just helping that to help with your confluences. Once you see price come up here, break, make a head. So let me just, so this is called a head and shoulders pattern, right? So I'm not going to get into this too much, but basically it's just a reversal pattern in the market. And once it breaks the neckline, it could start a new trend, start making new lower lows, lower highs, right? And that's exactly what it did. So off this head and shoulders, bam, we came instantly into this downtrend market. So we had this low, we had this lower high, lower low, lower high, lower low, lower high, lower low, lower high, and lower low, right? So anyways, let me pick that back up. So let me take this off. So like I said, we look for a third touch on the trend line, right? So I had this trend line in, this high connected to this high. So once it made this point and started dropping, I just connected it. So we connected. Actually, forgot to take this back. So now all I'm waiting for is price to come up and hit this trend line, right? And not all I'm looking for, but that's just one confluence. So I'm just looking for price to come up to hit this trend line. So let's just wait. Or actually, we're looking at market structure too. So like I said, this is a high, low, lower high, lower low, lower high, lower low. So once we have our lower high and our lower low, we have our swing high, swing low, we can add a fib in right here. So we're going to put the fib at the top to the down wick, and then we can see where price is just coming to retrace at, right? So now it's coming to the 61.8, falling, hit, fall, 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 right? So at this point in time, I was looking at price right here, and I was thinking that it could drop from the 61.8, but I was like, no, it could come up and hit the 78.6 as well as this trend line, as well as this key support level, and I would get in right here, and then price would drop. So that's what I was waiting for off the bat. So I wasn't looking to get in for a sell anywhere over here on the 61.8 because that's just the support level. So you just have one confluence in the fib. So that's just two confluence. And I need at least three to get into a trade, right? So we're just going to wait for this third touch. So 1, 2, we're going to wait for a third one. So as we can see, we finally hit that third touch, as well as this key level, 78.6, third touch. So now this is when I started to get into the market, because I seen that it took out all these highs right here that people were probably selling in the market. So it took them all out, and I just thought that this is manipulation, and we're going to continue down from here. So let's look at my they're both daily charts, I forgot. But anyways, this is what the price looked like, right? So I got in once price hit the 78.6 and started falling, and it was by these highs. So let me just show you where that is. Or actually, let me put my stop loss. So I got in around here, right? Stop loss was 130, or just right over this 78.6, right? And right over this key level. So we're going to move that right above the 78.6, right above this little key level. So this is our stop loss, and our take profit was this 128.580 level, right? So just this key level that was the daily key level. So look at our risk to reward. It's a 1 to 3, right? So we're risking $1,000 per se. I'm not really risking $1,000 per trade, but we're risking $1,000 to make $3,000, right? So this is when I got in the market, right around here. My stop loss is up here, because if we were to break this 78.6 in this trend line, then I wouldn't be looking for sales anymore. Even though this is still the higher low, price could still come up here and drop. But this is where I was looking at price, right? So this is about where I got into the market, and we're just going to see what happened. So once price started doing that, and then it did it again right here, I was kind of worried about price action at this level. I was like, is it trying to break up out this trend line to maybe retest it and go up? But I was like, nope, we're just going to stay in the trade, because if we're looking on the daily, you always want to look at the higher time frames, right? Look at the daily, look at the candles. We're still closing under this trend line. So even though if we look at the 2 hour, it looks like, oh my God, we're breaking out, we're closing above, we're going to push up, we're come back to retest. No, you always want to look at the higher time frames and see what's happening with the wicks and stuff, right? So this is good, this is good, this is good. 2 rejections, 3 daily rejections on the level, right? So everything's looking smooth. And we got this fat engulfing candle right here, right? So let's keep playing. So once price hit right here, I took partials, right? Because this looked like a head and shoulders pattern to me. It looked like a left shoulder, like I explained, a reversal pattern, right? So left shoulder, head, and I was waiting for a right shoulder. So I was thinking that this is it, nope, this is it, nope. But anyways, I just put partials right there because I didn't want price to reverse on me. And price come back and hit my stop loss, and I didn't take partials, right? So I'd lose 1% without taking partials. So once it hit there, I took 0.5% partials, and I put my stop loss to break even. So there's no risk on this trade, right? And then let's see what happened with price. So price started pushing up, and I was thinking to close around here somewhere on this level. But I was like, no, I'm not going to do that. And then also this is a good thing to understand, because your trend lines, you don't want to just keep them in the same place, right? So if price does this and breaks into the trend line, all we're going to do is just move it over. So we're going to move it up, because price went down, right? It didn't go up and break it or do something else. It went down. So we're still looking good. So this is still a valid trend line. But instead of this being 0.2, because remember we moved it up, it wasn't here anymore. We moved the trend line up to continue to hit this wick. So now this is our 0.2, right? So now we could wait for a 0.3 touch, right? So that's just what I was looking for. And I had a fib from this high to this low. And I was just looking for, let me go down to lower time frames. I was looking for price to hit off this trend line and off this 61.8 and off this little support right here that you can see. So I was thinking that price was going to come here and hit this and fall. And that's exactly what it did. So let's see. Came up. Oh, well, I guess it didn't hit the trend line. But it came up, hit the 61.8, and this sold support. So old support turns new resistance. And then once it did that, I was like, all right, so this trade is still cool. We still valid. So you can take that off. Take this off. And now we're just looking at the trade, right? So I'm pretty sure the market opened up, or the market closed around here sometime, right? And I was going to stay in this trade over the weekend because I didn't want to just take partials here and be out, and price could just come and hit this level in the new week. So this is probably about a Monday, Sunday when price opened back up, and let's see what happened. Price pushed all the way down, hit my psychological level 128,500 to the T, and it started playing around, right? But anyways, it hit the take profit, and this is about a 168 pip trade that we took and that we made. So that was just the EJ trade. I'm gonna kind of try to go over these fast because I don't want the video to be too long. So replay it if you got to so you can see it. But that was just my EJ trade and hit take profit. And so that's 1, 2, and now we're on the year at trade, right? So let's run it back. So, like I said, we always want to look at market structure, right? Start on the daily, get the overall picture, look at market structure. So let's take everything off chart. So right here, we can see that we're in a downtrend, right? Making new lower lows, lower highs, lower lows, lower highs, right? So if we're looking at this price right here, this is our high, this is our low, lower high, lower low, lower high, lower low, lower high, lower low. So this is our lower high that we have to look out for, because if we break this, then we're not in this bearish market anymore, right? We're forming a new structure. So let's wait until we break this. Okay, so right here, we didn't break it, right? Because it was wicks. It went up and fell. So this is when price broke it, right? So once price broke it right here, I was like, all right, now we're forming new structures. So now we're forming these higher highs, higher lows, higher highs. So this is a new structure. We're going to go to the 6 hour, and we're just going to look at market structure. So this is a low, high, higher low, higher high, higher low, higher high. So once we've seen that we're in the bullish market, we can only look for buys, right? We're not looking for sales. So now we're going to add in our technicals. So these are just to show you market structure. They just help me identify swing lows, swing highs, right? So like I said, low, high, higher low, higher high, higher low, higher high. So I always wait for a third touch, like I said. So this is the trend line that I had in here, and I just connected it to this point and this point, and I was waiting for a third touch right around here to look for a buy, but we didn't get that. So let's see what happened. So this is a trend line, right? Like I said, I had this trend line here, just in case price were to come back here. I could probably buy off here. So I just look for a third touch off trend line, right? But anyways, price started forming this ascending bullish structure. So, oops. So we can identify market structure. We already did. We're only looking for buys, right? Because we're forming higher highs. Why does this keep taking off my chart? Anyways, we're only forming higher highs and higher lows. So we're looking for buys, right? So just like the GPB, NZD trade, this is the same thing as in this year trade, right? So we're going to see what happens with price on this third touch. We got a good reaction here. This probably got a lot of buyers in because it looked like it rejected, looked like it was pushing up. But I was waiting for price to break, right? So let's see what happens. Because if we were to buy right here, let's look at the confluences. So we have this support, this resistance, and this support level. So that's one confluence. We have this trend line, so that's two confluences. Well, where's the other confluences at? Because price, there's no levels in here on the fib that we could be interacting at. So there's just two confluences, right? So I wouldn't take buys right there. So once it broke this trend line and started pushing down, I was like, all right, bet, we're coming up to test this previous higher low. So I'm going to look for buys around here, right? So I already had this marked off, and I was already waiting for price to come here. I had my alarm. I didn't have a stop loss set, right, because I wanted to see price action on the level. But I have my take profit right here, and I was waiting, right? So now we're waiting to see what price is going to do, because it could just bounce right here and just keep going up, right? Because this is the previous higher low. higher high. So until we break this, close below it to form new bear structure, or if we just keep pushing up to make a new higher high, this would be our higher low, right? So let's look what happened. So price never hit it. And once it hit this and started pushing up, I wanted to get into the trade, but I was like, nah, I gotta account for this whole wick, right? Because you see how fat this wick is? Price could just play around, get people right here, start buying, and then stop them out. So I was like, all right, I want to wait for this wick because I wanted to at least come and hit the wick, or I'm not gonna get into the trade. And if I miss it, then oh well. But price came back down with this big engulfing candle, and I was like, all right, bet, yo, this is the time. This is what we're gonna look to enter. So let's go down to the 2 hour. And as you can tell, price is sitting here at this level for a minute, right? And we're not breaking it, right? So this is the line that I had on my price. So if it broke and closed under here, then I wouldn't want to be getting into this trade, right? So we're looking, are we closing under it and breaking? No. So once it made this bullish candle right here, this is when I got into this trade, right? So if we go back to my Google Sheets, so this is what it looked like when I got into the trade, right? So low, high, higher low, higher high, higher low, higher high, breaking the third trend line, come back to test the previous higher low, minimum risk, maximum reward, right? So once it made this bullish engulfing candle, this is when I got into the trade. My stop loss was 58798. So let's go ahead and add that. 58798. So this is what the trade looked like, and as you can tell, look at the risk reward. Like I said, minimum risk, maximum reward, 5.29. So if we're risking $1,000, like I said, and I'm not risking that, but if we're risking that, we would make around $5,500 or $5,000, right? So this is when I entered the trade, and we're just gonna see what happened. So price started pushing up, and once it hit this level, this is when I took partials, right? Because price could just hit this level and fall or do something, right? So once it hit this support resistance level, so there's just this key level, I took partials and I put my stop loss to break even, right? Because I didn't want price to just come back here and stop me out, lose money or whatever. So once it hit this level, had an alarm here, took partials, put my stop loss to break even. So now we're just in this trade, no risk, no nothing, right? And we took partials, so everything's looking good. And then this is my target. This is my final target, right? Because on the daily, if you're looking back here, you can see it hit here, support, and it came back, tested resistance, fell, right? So if price were to come back up here again, I was just thinking that it was going to fall, right? So this is where I want to have my take profit. So let's see what happened with price. So it hit take profit to the T, right? Like I said, and this is a psychological level of 61,500. So it hit that to the T, and this is a 228 pip trade. So that was a good trade, and I hope you guys learned something from that, because this is a very good trade that I took, and probably one of the best trades that I took and managed. So I just like that trade. That's why I wanted to make this YouTube video, to help you guys understand just price movements and how the market moves or whatever, right? Just how I view the market. So we went over these 3 trades. Let's go over UCAD, and this is the trade that I'm still in. And as you can tell, actually, let me just go over it. So I'm going to keep this on because I'm still in this trade and I don't want to take all my stuff off. But as you can tell, this is going to be a quick little recap. Not recap, but breakdown. So like I said, let's start a daily. We're on a daily, right? So we can get the overall picture, reset the chart. So we're looking here for prices forming what structure? Bearish or bullish? Bearish, right? Because we're going down. So we're not looking to take buys anywhere over here yet, right? So we have to wait for market to break a higher low and then new market structure to form. So let's look at the price. So this is a high, low, lower high, lower low, lower high, lower low, lower high, lower low. So until price breaks this lower high, we're still looking for sales, right? Because price could come anywhere in here and then keep pushing down to make a new lower low, right? And start forming this structure down there. or forming the continuation of the trend, right? So this is the previous high we're looking at. So until we break this and close above this, we're still looking for sales. So let's look at having a price. Not breaking it, not breaking it, not breaking it, break. Break and close, right? So now this is new structure. So we're not looking at any of this right here, right? We're looking at new structure. So let's see what happened. So we can just say this is our low, this is our high, higher low, higher high, higher low, higher high. So now we have our higher high. Now we're just looking to get into the market, right? And just like I said in those last two trades, this could have been a trade that I took. So we have our one touch. We have a one touch right here, two touch. Don't look at this trend line right now. One touch, oops. One touch, two touch. This would be our third touch, right? We broke it and look at the previous higher low. We came, hit it to the T, didn't break it. So we're still looking, so we're still bullish, right? And then look what happened with price. Went straight up. And I'm going to show you what happened after that. But I didn't get into this trade because I didn't see this. But I just seen this just now, and that would have been a good trade to get into. So I potentially could have got it right here instead of right here where I got it. But anyways, I just want to show you guys that because I just seen that. But so I had one touch here, two touch here. And like I said, we're in a bullish market, so we're looking for buys. So that takes the sells out the way. So I'm just waiting for my third touch, like I said, right? So let's see what happens. As well as this trend line I just deleted. This trend line was just to help me identify once we're starting to get bullish action, right? Because we hit here, we fell. We hit here, fell. Third touch, fell. And so I just want to see a breakout of this trend line to show that, okay, we're now sellers are now stepping out the way and buyers are in the market. So let's see if we get that. Okay, so now we broke this descending trend line, right? So now we're looking at bullish market. So once price hit this, so this is a higher low, right? Higher high, higher low. So now once price started doing that, I'm just waiting for my third touch, like I said, right? We're still waiting for that third touch. So we didn't get it yet. Didn't get it yet. Boom, now we got it, right? So this is our third touch, and well, I had this right here, right? Like it is right now. So I just had this waiting for the third touch, and once it hit it, I had this fib on here, right? So from the previous higher low, so swing low, swing high. And now we're just waiting to see where price can retrace from, right? So this is a 61.8, and even though it didn't hit it, it came to it, and it was third touch. So I just got into the trade right around here, right? Or the next candle when price started pushing up. So right around here, right? And actually, we can go check. So I got in like right around here, right? So, and our stop loss was 241.89. 241.89. So this is our stop loss right under this previous higher low, right? Because like I said, if we break the higher low, then we're not bullish anymore. We're bearish, right? Or not bearish, but we're just waiting for new market structure to form, and this will be invalidated, right? So my stop loss was right here just to be safe, and this is where I entered the market. And I have my take profit originally up here, but I'll show you guys why I'm having it here instead. So this is where my take profit is now, and it is because on the daily, if we zoom out, see how it's one touch right here, two touches right here. So I put in this trend line to show where price could come up and hit a third touch. And you see where my take profit would have been up here, right? But this is the trend line. So if price were to come up here and hit this trend line, it could just fall right here, right? Because it would be the third touch. So I didn't want my target to be up here, right? I wanted to be safe. So I put my target right here. So risk to reward 2.13. So if you're risking $1,000, you're making $2,000, right? So that's a good risk to reward. So I got in a trade around here. Like I said, the confluences were third touch, so a trend line, this key level, and then this fib, right? So this is when I got into the market, and let's see what happened. So we start playing around, and automatically we started going up. So like I said, a head and shoulders pattern is a reversal pattern in the market, and I identified this as it, and I thought this is going to be a right shoulder or something like that, and it was going to fall, so I just wanted to be safe. So I took partial profits right here, and once it hit this, I put my trade to break even, right? So if price were to come back down here, it wouldn't take me out. It would just take out, or it would take me out, but I wouldn't lose no money, right? So I put a break even right there, and this is my final target, right? So I took partials here, and this is my final target. So let's just see what's price doing. Well, this is price right now. We're not in this replay mode anymore. This is the actual market. So like I said, price is coming up here to this line, and I have my alarm here. So if price sort of come hit this, I'll close the trade, right? Because this is where I want to take my final targets, just in case price were to come hit this trend line. And low key, I might close it soon because it is coming up to that trend line. So I don't know if I'm gonna let it hit here, or I'm just gonna close it at this trend line. So I'll just keep you guys updated, I guess. Or if you follow me on Instagram, you'll be updated because I post everything on Instagram. So if you're not following me on Instagram, go ahead and put in my little thingy thing right there. So go ahead and follow me if you want to on Instagram. I post a lot of my stuff on there on my story. So anyways, this is just where price is right now, and I'm probably gonna close it around here somewhere. So that's just those 4 trades that I took this week, and they was all really good trades, and it profited me around 7% in the market. That was just my trades, and I just wanted to break it down to you guys. So hopefully you guys take something away from that and you learn something. So appreciate you for watching. If you stay for the whole thing, I really appreciate you. And I don't know, FXLU out.